Hello everyone, welcome back to our YouTube tutorial. So my name is Fresher and I'm a signal provider, and I also teach people how to trade effectively. So today we are going to discuss 7 silly mistakes that most traders do when they are trading. Okay, and I hope you have even noticed some of these mistakes when you are trading. So mistake number 1 is over buying at overbought and selling at oversold. So that's silly mistake number 1. So you should not buy at overbought. So I'll be using this example here. Let me show you a nice example. Okay, so if you are using RSI 21, okay, if you're using RSI 21 or any RSI, but for me I'm using RSI 21, so you should not sell when RSI is at 30. Okay, you should not sell. Wait for market structure. Wait for something that will tell you a buy is happening. Okay, don't sell. Okay, because a buy will be happening. And another thing, don't buy immediately. Okay, it's a 50-50 chance. If you're using RSI to buy and sell, it's a 50-50 chance. It won't make you profitable long term. Okay, wait for market structure. Okay, see the reason why it's about to buy up, but don't just buy when RSI is 30 and don't sell. Okay, so that's a silly mistake people do when they are trading overbought and oversold. Okay, another mistake is chasing trade. If you see this as a buy, okay, if you see this as a buy, okay, hold the buy until your stop loss is hit. Don't close at the loss and then you sell again. Okay, since going against you on the sell, you should not sell. No, you should stick to the buy. Don't close the sell because the market is going don't close the buy because the market is going against you. Buy and buy. No. Okay, so you are chasing trade. For example, if this was if you are seeing a sell here and starting going against you, okay, stick to the sell. You are the one who analyzes the market. You are the one, you know why it's selling. So why should you change your mind so quickly that you are now reversing the trade? Yeah, you should have reason why you are reversing the trade, but reversing that trade because it is going against you is not a good idea. So that's reason number 2. Stop chasing trade. Reason number 3, you buying too early and selling too early too without any confirmation. Okay, I'll be using RSI again. Okay, if you are using RSI to buy and sell, okay, the market is dropping and RSI maybe is at 30, and then you start telling people buy. No, you cannot start people telling buy because the RSI is 30. No, you are buying too early. Okay, you are buying too early. You need a market structure. You need market to tell you that it's about to buy. Okay, it's about to buy. You need a proper market structure. But buying just because it is going down, and maybe your RSI is saying 30, maybe you're using stochastic, that's a bad idea. Also, when you are selling, like here, people start saying sell. You can see, I don't know what they are usually use when they are telling sell, but most of them they are using RSI. So they start sell. Okay, you are selling and the thing is still going up. You have to wait for market structure. Market structure is low, high, double top, things like those. Things that will tell you even like here we have a nice resistance here. These are things that will tell you the market is about to sell. But just selling when the market is deep going up, that's a bad idea. Another mistake is entering trade too late. You're entering trade too late. Okay, for example, if you are selling here, okay, maybe you saw this divergence and you plot your trend line like here, because I usually use trend line for my entries. and then I came and I find that the market is around this level is selling, so I sell. Okay, I'm selling too late. I'm selling too late because if I sell here, market start revising against me, I'll be in a drawdown. I'll start panicking. Okay, I'll start panicking, and since I'm panicking, I'll get out with loss, and then the market start continue back in my direction. So make sure you have that sniper entry entering exactly after the breakout if you're using trend line. Okay, I don't know what you are using, but whatever you're using, make sure you have the sniper entry. Enter exactly where you want it. But if you find that the market has dropped, you miss the trade. Let the trade make it itself. If it's a pullback, then you can decide now to enter again at that level, because that's where you should be, your first trade. And then if drop, okay, if continue go back, it's still okay. But entering after the trade is gone is a bad behavior. It's also a silly mistake, because you'll be a huge drawdown, and your stop loss will be very poor, and your risk reward ratio will be very poor. So stop entering trade too late. Selling and buying after rejection. If you see a rejection, make sure you wait for confirmation. That's another silly mistake we usually do. I can see a nice rejection here. Let me check this one. Let me check this one here. So this is a rejection. Maybe you saw this rejection, and make sure this rejection, before you take the rejection, make sure they are happening at key level of support and resistance. Don't just say, okay, it's rejecting RSI, it's a 70, now sell. No. Another thing you have to make sure is a strong level of support and resistance. If you're adding RSI, make sure you're adding RSI. You need to know why it's rejecting. You need to know why it's rejecting, and then before you enter that rejection, you need a strong level. You need another confirmation. You need a bullish candle to close before you sell. Okay, so don't just sell immediately. Just sell immediately. No, you need another confirmation. So you need another candle to close bearish if you are selling, and bullish if you are buying. Okay, so make sure. So any rejection that coming from nowhere, you'll be saying such kind of things. Any rejection coming from nowhere is not something to consider. Leave it. It need to be a strong level of support or resistance. So stop buying and selling after rejection without confirmation. Another silly mistake is exiting trade in loss before hitting stop loss. So you're exiting your trade. Maybe let me see example of here. So maybe you are selling around this area and the market start going against you. Okay, so maybe you saw a nice sell setup and the trade starting going against you. So don't exit that trade until it hit your stop loss. That's the reason why we have stop loss. The market will still rally back to your direction, and you exited with loss because you feared to lose. Okay, don't close in a loss until it hit your stop loss. So that's another mistake. Another silly mistake is putting stop loss number of pips. Okay, so let me show you another nice example here. Okay, you sell here and then you say, okay, I'm risking around 30 pips. So this is your stop loss. You entered around here, then this is your stop loss. Okay, I'm putting 30 pips stop loss. I'm putting 50 pips stop loss. I'm putting 90 pips stop loss. Why are you putting 90 pips stop loss? No, your stop loss should be at support and resistance level. Okay, and not just at support and resistance level, above support, like here above resistance. Okay, put your stop loss above resistance here, so that the market can still come back, like in this situation here, come back, retest that level of resistance. Can see it came back, tested that level of resistance. But since you put your stop loss 20 pips, 20 pips, 30 pips, 20 points, you are out. And you are heartbroken, and then see the market going back into direction. So put above there. So put above. You can say here to put here, then you can calculate how much pips you are risking or point you are risking to this stop loss, and then after that calculate loss size that you'll be using, so that if your stop loss is hit, you are losing a maximum number of dollars. Okay, you are risking a maximum dollar. For example, if you just shift here and then say I'm selling this with 0.3 and my stop loss hit, I'll be losing $8. Okay, if I shift here and then I reduce my loss size to 0.2, I'll be still losing $8. Even if I shift my stop loss here and use 0.1, now I'll be still losing $8. So you are balancing your loss size to the level of your stop loss. But the thing but stop that thing of counting how many pips you are losing, so that you can lose that. No, calculate how much you are losing based on your support level. Stop putting stop loss around support, put above. Around a resistance, like this case, put above. If you are selling, put below. If you are buying, put below support. Don't not so close to the support area, no, below, at least below, and then calculate how much you're gonna lose from there. So thank you so much, guys. That was a quick explanation of silly mistake most traders do when they are trading and they cost them silly dollars. So if you lose $5, $10 on such silly mistakes, it's very, very painful. If you like this video, don't forget to like, don't forget to share, and don't forget to subscribe for the next amazing video, because the next video will be a new strategy that I've just discovered, and I'll be dropping it on this YouTube channel. Thank you so much.